Welcome everyone, and thank you for joining our webinar today, where we're going to discuss the temporary VAT rate change in the hospitality sector. This sector has been severely hit by the coronavirus pandemic due to the forced closures and now operating at reduced capacity due to social distancing. The temporary VAT cut is one of the ways in which the government is trying to support the sector. So let's look at this in more detail. So on the 8th of July, in the summer statement, the government announced that the rate of VAT for certain suppliers of hospitality, hotel and holiday accommodation and admission to certain attractions will be reduced to 5%. This reduction will have effect from the 15th of July and be in place until the 12th of January next year. Whether you pass this on to your customers would appear to be a commercial decision, as there's been no guidance related to this from HMRC. We'll go through each sector in more detail, but it's important to note that the reduced rate only applies to supplies to the end consumer rather than to transactions earlier in the chain, because I have had a number of questions around this. So the 5% will apply to supplies of catering. So this means food and drink consumed on the premises in which it is sold. So for example, a pub, cafe or restaurant. It does not apply to alcoholic beverages, sadly, which will remain subject to VAT at 20%. It will also apply to hot takeaway food and drink. And obviously has to be non-alcoholic drink. Other takeaway items will remain at their original VAT rates. So for example, cold sandwiches and salads to be taken away will be 0 rated. Cold drinks, crisps, confectionery will be standard rated. This will result in supplies at different VAT rates, which can be complex for certain businesses and does not account for VAT at an item level. And we'll cover this in more detail later on in the webinar. One thing that's also important to note in this part is that food and drink that are supplied as part of a wider supply of catering services for consumption off premises will remain standard rated. So moving on to accommodation, the reduced rate will apply to sleeping accommodation in a hotel, inn, boarding house or other similar establishment. A similar establishment is one that has, as you'd expect, similar characteristics to hotels, so furnished sleeping accommodation, which is used or held out as being suitable for use by visitors or travellers. So this will include B&Bs, service flats that are available for short-term lets. The key point is that it must be for sleeping and therefore doesn't apply to room hire for events such as weddings or parties. It will apply in some instances where the main purpose of the hire is a supply of catering. The reduced rate will also apply to caravan and tent pitches and any facilities that are provided at the same time with those pitches. It also applies to certain other holiday accommodation. So this is, it's not defined by HMRC, but they list out this could apply to any house, flat, chalet, villa, beach hut, tent, caravan or houseboat that is advertised or held out as suitable for holiday or leisure use. So the reduced rate will apply where permission has been granted to occupy holiday accommodation. The attractions, the reduced rate actually applies to the admission to any of the activities that are listed on this slide. It only applies where the admission fees will be subject to 20%, so it doesn't override the cultural exemption, for example. So if you are an entity that doesn't charge VAT on admission to any of these because you fall under the cultural exemption, you will remain within that exemption. Also, the reduced rate doesn't apply to any sporting events. They will remain subject to VAT at 20%. In some circumstances, goods or services are provided as part of the admission fee. So it could be a free drink or a brochure. And therefore you need to consider whether that additional item is incidental to the admission rather than being an aim in itself. So HMRC give the example of a brewery tour, which includes a free drink as part of the admission. For this, it will be incidental to the tour because the main purpose of that is obviously learning about the brewing process. But if you were paying for an admission fee where it was just for the purposes of enjoying drinks, for example, that would not qualify for the reduced rate. I've included live performances on there, because in theory, if admission fee is charged to access those, they would also qualify for the reduced rate. But it won't apply if the event is pre-recorded because this is deemed to be an electronically supplied service, which will have different VAT obligations. The mixture of VAT rates may cause some businesses additional complexities. So for example, if they offer deals where there is one price for different items, different VAT rates, such as burger, chips and a beer for a fixed price, such as £9.99. Where this is the case, the business will need to determine the value of each item as a proportion of the retail price to be able to calculate how much VAT is due. So this can be done on the basis of the cost value or the market value. I've included a worked calculation on the slide, so feel free to take a screenshot of that or contact me if you need any further information. So when it comes to invoices, if you issue a VAT invoice, so whether that's a full invoice, a retailer invoice or a simplified invoice, and you show a rate of VAT, this will obviously need to be updated to show the applicable rates when you obviously make your supply. If you do not issue any VAT invoices, which obviously many businesses in this sector will not, and therefore you don't show a rate of VAT, there aren't any anticipated changes to your invoicing. Thinking about deposits, a deposit is a prepayment for a future supply, and VAT is due at the point that the deposit is received based on obviously the rate in force at that time. However, there are special rules which apply to a change of VAT rate. So under these special rules, a business can opt to apply the rate in force at the time the service is actually performed. So therefore, if a hotel or a restaurant takes a deposit for a booking, so they take the deposit now in July for a booking that takes place in August 2020, they would have obviously charged VAT at 20% on that deposit. But because the actual service is being provided after the VAT rate change, they can opt to charge the lower rate that will be enforced when the performance of that meal and accommodation is provided. If a VAT invoice has been issued, though, obviously showing the 20%, that will need to be credited a new invoice issued at the lower rate. Credit notes will need to be issued at the rate that was in force at the time the original invoice was issued. So if you raise an invoice today, which is at 20%, and then you credit it in 2 weeks' time, you'd obviously have to apply the 20% because that was the rate that was in force when the original invoice was issued. So there are some practical points as well to be considered. So if a business accounts for VAT at line item and uses an accounting system, the 5% VAT rate should be coded to the relevant items. So most systems already have 5%, as it obviously already exists. And one point that's obviously important to note here as well is actually if you're a business that's not in the hospitality sector, but is buying in accommodation or taking staff for a meal and you're seeking to reclaim this VAT, you'll need to make sure that you're claiming it at the appropriate rate rather than just automatically coding it to 20%. So while many businesses will be able to apply VAT based on each individual item sold, other businesses will not be able to do so and will typically apply that to their daily takings. Where this is the case, HMRC need to be satisfied that you're actually not able to account for VAT at the point of sale, and where you're applying an apportionment, they need to be comfortable that it is fair and reasonable. So they would need to, as a business, will need to be apportioning based on a sample of actual sales for a representative period, and that will need to take account of hourly, daily and seasonal fluctuations, and then use that apportionment to apply to their daily sales. Now this will need to be repeated on probably every quarter to make sure that the rate is appropriate and fair and reasonable. So if you are a business that's calculating VAT based on your VAT inclusive selling prices, you'll need to apply the new VAT fraction, which is 1/21st, and that's for the 5% rate. In terms of the other accounting schemes, there are no anticipated changes to cash accounting. HMRC may reduce the annual accounting instalments, but would notify businesses as appropriate if they plan to do so. We understand that there will be a change to the flat rate percentages to reflect this temporary reduced rate. However, these have not been published at the time of recording this webinar, but HMRC direct people to the flat rate guidance for this. So I hope you found this short webinar useful. If you have any questions, feel free to give me a call or drop me an email. I will be happy to help. Thank you very much for listening. Goodbye.